What's up, guys? So the Dow Jones is actually underperforming the S&P and NASDAQ currently. However, there are 10 dividend paying stocks that are on the Dow right now that just reached their new all-time highs. And that's a huge indicator for us as investors. So in this video, just real quickly, I want to give you those 10 stocks because I think that 2 of them are maybe worth an investment. So I want to dive into that, but first I want to give you just a little bit of market context because there's a huge number of companies right now on the Dow that are at their 52-week highs. Right now, unless you're living under a rock, you know that the market is doing well right now. We're in a bull market, investors are happy, and there's a huge number that are hitting their 52-week highs, but there's only a few, very small few, that are at their all-time highs. And that's what I want to show you here. So here they are. Here's 10 companies that are at their all-time highs right now. You can see some big names on this list like Visa, JP Morgan, Caterpillar. But the first one on this list that I want to kind of highlight is maybe a potential buy is Home Depot. So Home Depot represents a huge success story. Their revenue, if you look over the last 20 years, is like perfectly aligned with the Case-Shiller Home Price Index, as you can see here on this chart. And what's great about this company is that Home Depot is mirroring the rise in the US real estate price. So revenue, just in the last 10 years, revenue is up 90% for Home Depot. And when I look at it and try to see what their secret sauce is, I believe that Home Depot's secret sauce is a blend of top line growth and margin expansion. Their operating margin is 14.5%, and that, just to give you some context, that blows their competitors like Lowe's and Costco's out of the water. And I do have to say, I'm not personally invested in Home Depot, but it's definitely on my radar. Definitely a stock I've been looking at over the last few days. And then the other stock on our list is Microsoft. This, guys, Microsoft, it's a household name. They're a tech titan. They're a dividend-paying powerhouse, and they've got a vision for the future thanks to AI. Their intelligent cloud segment is a gold mine. In fact, their revenue and operating income surpasses all of 2020 in just the first half of fiscal 2024. Again, revenue and operating income is surpassing all of fiscal 2020 just in the first half of 2024. That shows you how crazy this company is expanding. Azure's open AI service, or ChatGPT, it's not just a product, guys. This is a platform, and it's a platform for innovation. Now, I do have an open position in Microsoft, and I'll definitely be sure to make another video if I buy any more stock in either one of these great companies. But out of the top 10, why did I zero in on these 2? Why Home Depot? Why Microsoft? Very different companies. What's the connection here? Well, it's their ability to combine 3 things: solid growth, margin expansion, and strong execution into a recipe for success. Both of these companies have demonstrated remarkable earnings growth. Microsoft's earnings per share are up 146% in just the last 5 years. And we do have to note that their PE values are actually quite high, but I don't think that's a problem, and I think that it's actually still a fair value because of their incredible growth rates. So when looking at PE values, you do have to consider growth rate. And I just have to say, Home Depot, Microsoft, they're not just surviving. These companies are thriving. Both of these companies represent excellent choices for investors that are looking for reliable companies with growth potential. Home Depot, it offers retail dominance. Microsoft, it'll give you tech innovation. Both companies offer compelling cases to include in a stock portfolio. But anyway, guys, I really appreciate y'all watching this video. If you're considering adding these stocks to your own portfolio, maybe leave a comment, let us know. Anyway, hit that subscribe button, ring the bell for notifications, and until next time, happy investing.